Hey guys, Vulcan Trader here. Got a stock pick for you and a little lesson. I think Luckin Coffee is going to be a good stock to own here. They got earnings coming out tomorrow morning. So if you happen to get this tonight and then you have access to extended hours trading, you could potentially take the trade before the earnings come out and get maybe a lower price, maybe right here or something like that. It'd be better to just wait until the market open, and I'll show you how you do it. So I think this is a good one because restaurant stocks have been doing pretty good right now. So we look at, say, Chipotle. We also got McDonald's, Shake Shack. Also had really good earnings. You can see this one. And then Starbucks, which would be the one I'm going to compare it to for this. Starbucks stock's been doing really well. And so if we look at Starbucks, the market cap of Starbucks is 113 billion, okay? So just the size in dollar, what the company's worth, according to what it's trading at currently. And then if we go back to our Luckin Coffee example, or Luckin Coffee chart, I should say, its market cap is 5 billion, and so they're growing really fast and expanding super quickly. They've got, I think, as many or got as many or gonna have as many, maybe they do already, stores, anyway, close to as many stores as Starbucks already does in China, but their market cap is only 5 billion, so they're growing at a really fast clip. And restaurant stocks are doing well. They got earnings coming out tomorrow. Earnings is a lot of times a catalyst for a stock to move and keep moving. When you get a good earnings report, you get something called PEAD, which is post earnings announcement drift, PEAD. And so depending on what the stock does tomorrow, so it doesn't really matter what the earnings are. You don't need to know anything about it. All you need to know is that once the earnings happen, if the stock goes up, the earnings were good according to the market. If it goes down, it was bad according to the market. So so we got this range here. So this is a cup with handle pattern. It's kind of coined by William O'Neill from Investor's Business Daily. He wrote a book called How to Make Money in the Stock Market, or How to Make Money in Stocks. And this is kind of the stock market growth investors Bible, and I'll link to that in the description. So anyway, this is roughly a cup with handle right here. Here's the bottom of the cup. This is the handle. And I'll show you another one just so we get maybe one or two more. So Guardant Health is another one that had one recently. So here's the cup. Here's the handle. You get in a range. Earnings happens. Boom, shoots up right there, okay? And so sometimes it gaps up so far that it's hard to get it before you get it at a good to where your risk is good enough. But hopefully Luckin doesn't go too far past that. And then another one, Chipotle actually is another cup with handle that we could show you here that happened. It's a little bit bigger one. It's on the weekly chart. I'll show you. It's a giant cup. Here's the handle, and right there, and then boom, right after earnings, right after the handle's made, it goes up. So you get a big drawdown, comes back. So we got the same type of setup roughly here in Luckin. And since I think it's way undervalued compared to Starbucks, could kind of, let's say it even got to, 20 billion. Starbucks is 113 billion. Say it made it 20 billion. You're looking at a $100 stock right here from what it's at currently, right? So how you'd want to play it, let's go back to the daily chart here. You're going to play this. So if you go to my position site, had a position site, a trade video, we're gonna buy it if it breaks the all-time high here. So you want to buy a stock when it's actually going higher, breaking out to all-time highs, and sometimes it's, you hear, oh, buy low, sell high. Yeah, you can do that, but a lot of times it's better to buy high, sell higher, because you want to go with the trend. The trend is your friend. So if it starts going this way, the trend is against you, and it could continue lower after earnings. But if it goes this way, then the trend will continue after earnings upward. So we actually don't want to buy it unless it breaks this line right here, say about 2650 is what we're looking at. And so a position size right here for us, a long position with our stop. We're going to put our stop roughly about the 20-day moving average. So even if I don't do an update on this video, set up a 20-day moving average. I showed you on the how to set up trading view video, how to do that. And that's your 20-day moving average right there. You could say if you buy it at 2650 and then it breaks below the 20-day moving average after that, then you'd be stopped out. And our risk here is it's about 11% stop, or $3 stop. And if it keeps going, say you're up like maybe 10% on it, then you could either you keep this one, maybe move the stop up to break even, and then as maybe the 20-day passes it, and you could move it to maybe the 50-day your stop if you want like a more longer term position in this to hold it longer, because I think it's a good long-term holding if this earnings does good. So all you got to do, we take say our account size was $1,000, easy round way to do it, 1,000 times, and we're going to risk 1% on this trade, 0.01. It's $10 or $10, 1% of our account divided by our stop here is about 3 divided by 3. So we could buy 3 shares of Luckin Coffee, and we're going to buy it only if it breaks 26.50 here. So I'll show you on Robinhood how to do this. You use a stop order, and we'll say if you don't want to pay up more than, we use a stop limit order. Say we won't pay more than maybe 5% above the buy point, okay, which is about 27.50 approximately, okay. So we will say buy Luckin Coffee. We got our order type, stop limit order, and stop price is 26.5. Limit price is 27.5. Shares is 3. And we'll say good for day means it's only will be active tomorrow. And so you'd buy 3 shares of Luckin Coffee if the price goes above 26.50 after the earnings, and it won't pay any more than 27.50. And then after that was done, so you actually got filled tomorrow on that, then for our stop order, you do you just probably do a stop limit order too for the sell. So if you're buying, and then we go back to, okay, if I can figure out how to sell this, I don't have any to sell, but it's the same thing except you do a sell order, and then you do your stop price would be, let's see right here, 23.36. I'd have to own it in order to put it in a sell, so I guess I can't do that. But so you put your stop at if you got filled and you owned it, put your stop at 23.40, and it'd be like this, except the sell 23.4, and then you'd say maybe your limit price. I'd do a lot closer for a limit. I personally would just put it right at it. Same thing, do 23.4 for your. I'm okay with getting a little bit of slippage, meaning, if it goes past 26.50 on the earnings, sometimes it's hard to catch it, and it's okay to pay up, because if it starts rocking, it might hit 30, go even higher all the way up to here. So it's okay if you pay up a little bit here. But when you're getting stopped out, try and get the price you want to get stopped out at, but then watch it, and then if it starts going like a buck past, then maybe you just put in a market order and sell it straight away. Okay. So that's it. There's a good pick for you and a little lesson, and I'll put all the things about William O'Neill's book and stuff in there. Like, subscribe, and hit the bell. Have a good day.